Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, February 16th, 2023. It's 11 o'clock on the button Eastern Times. I'm starting the video. So an hour and a half into the trading session, I'm going to go over, as I often do, start out with the indexes, hit on a few trade updates, and at least one new trade idea I'm going to throw out there for you on Palladium, and we'll go from there. Alrighty, let's start out here. This is a chart I got out to you this morning. I got out in pre-market, and I was very clear that you want to see a break. There's the primary uptrend line, which we broke here, and we've had several back tests. That's back test one right here with the first rejection, and this is a second back test, happened late yesterday, early this morning, into that minor uptrend line that I gave you right there. And the reason you want to wait for a solid close, a 60-minute break, and not just a 60-minute break, a solid close. And in the regular session, I made sure to put that in italics to make sure that's important, because when you're down, that was down 1.5 or plus 1% in the pre-market, especially during a more intermediate term, near term uptrend, they're going to buy that dip, and it's almost assured you're going to see when the bell rings at 9:30 and the starters, the big boys, step onto the field, meaning institutions. That's usually you're going to see that at least good for a bounce trade. Rarely you're going to see us just go right down through there, unless there was some other big catalyst, fundamental catalyst, which it wasn't. So that's a 60-minute chart, and I'm still, I do maintain the next sell signal comes on a solid break of this line, and those ones I'm going to give you, I'll update those on the S&P 500 and Russell 2000. That's again our minor trend line. So you really have this price channel between the primary uptrend line off the early January lows right here, and this minor uptrend line bouncing around there. The scenario that I'm still open to very much is the marginal new high. This is a 60-minute chart of QQQ, and that would look like this. That would say they come in, they pop that previous high right here, and this is the high from end of the month, beginning end of February or end of January, early February, and they pop that and give us a marginal and divergent high that would clear out probably the last of the short interest, the weak-handed, it's just bearish sentiment too. It's not just about positioning. It's a big part of it, clearing out shorts, but also clearing out bearish sentiment and injecting bullish sentiment's getting pretty high lately from what I gather, and I'll check those. I'll have to look again, but the polls are getting pretty stretched. But that's certainly a possibility, and it would give you, again, if it happens soon, we're going to have that negative divergence here on the 60-minute chart. I'd really like to see that. Now, with that being said, divergence is not the be-all, end-all. You don't have to have positive or negative divergence to end a trend. Positive divergence does often indicate a trend reversal, after a downtrend like it did here, and there was a breakout or buy signal, and it was that divergence was a catalyst for this rally. And then we could have and get a divergent high there, and it would just help to make the case a little stronger for a more lasting reversal. But again, it's not an absolute necessity. What you should watch right now, I think, is this 302.90-ish level right there. You zoom in, that's been really good support lately right here. We had a gap separating it right there, and then a lot of reactions. Other than this little brief dip down below, I think that's an important level. So really you have dual levels to watch. You have the uptrend line, and then just below that, benefit of the doubt, give it safe 302.93, and that there's a big old thin zone. A thin zone, if you see these, you can make out these green and red bars right here. This farthest one's out to right here. They're called volume at price histogram bars. They show you where the amount of volume at each price level. Unlike these are your regular volume bars down here, but the volume at price shows you again at what price. And they work when there's. I look for these thin zones, and there's one right here down to about that level, that box. And so that's where, if we break that, that's a likely target, the top of that thin zone right there, around that 293-ish level. And again, first things first, let's see where we go from here. The one thing I said, and I hope some of you find value in this, something I've learned over the years, I've gotten pretty good at, you don't always nail it, but pretty damn good, is not only identifying, inflection points in the market. This time it's been a slow roll. We haven't really rolled yet, but more so, and I've been saying this for weeks, identifying those periods where you're likely to grind around and not really be conducive to swing trading. And so the takeaway is, I think you'll agree, if you've been trying to swing trade the market long or short, for the last few weeks, you've gone, depending on, I'm talking 10% plus, you've gone nowhere. Bulls and bears are getting frustrated, and that's what, predict, and that may continue. So that's this whole thing when you go to the daily chart. These are your daily candles. This is a grind. And so the takeaway is you can actively trade these kind of trends. There's your primary uptrend line right there again that I just showed you on the 60. And that's about the only way you're going to make money. You can't squeeze blood from a stone or water from a rock, whatever one of those is British, one's American. But that's the same thing happens in a sideways market that's consolidating. There's a lot of gains to digest. Look at that. PPO still hasn't crossed over. So I do still believe we head down in the next, significant move. 10% plus will be to the downside. It's a matter of, are we going to get that marginal new and divergent high before we do it or not? And look, with the bearish PPO crossover, I've gone over that many times. Look how these lines are just flattened out. The Qs, it's almost amazing. So that's why, it did look and still looks imminent. But like I said, sometimes the lines will do this. They either look like they're going to cross and they bounce to get that one last little thrust up, or they flatten out for a while. This is unusual to see them flattening out that long, but it does happen. But either way, there's we don't have that confirmation yet with a bearish cross on the daily PPO of QQQ. But you do have a breakdown and a back test of the primary trend line. And the thing about back testing is you can back test once, one and done, and never look back, or you can back test for a while, and that would have that marginal new high scenario. Or sometimes you break a trend line and you back test and then you regain it, and then it's just a foiled bearish setup. So I still think, in the easy way, if you're easy way to look at this, if it sounds confusing, well, we can go up. I'm not saying look, anything's possible. I'm just outright wrong if we go up 13% or more here right now, and then I'll hopefully change my tune and positioning before then. But I'm only talking a window of another, and it's, again, we're right now today trading at today where we were. You can see this candle back here, on the beginning of the month, February 3rd. So it's been 2 weeks going nowhere, but a little up and a little down. And if we go up and hit that marginal new high, then you're only talking from where we're at today, today's high right there, right where we're at right now. We're at today's high. You're talking maybe 3% or so. And that's not a big number when you're looking for a much larger move. So anyways, nothing's really changed there. And for actively trading, you can look at these, all the indexes. I'm a big proponent of, even if you're only going to trade one index, which is fine, watch them all. Here's the Russell 2000. That is a very well-defined trend line. This is a 60-minute chart, hourly candles. You have multiple reactions on that trend line, including recently, and these at the low, and you hit it. And again, just based on the look of the charts and everything else, a reaction was likely, and so that's it. So you were able to trade. If you traded it this morning, got that one out right when we were on the trend line. It's a 1.5% bounce, either to sidestep give back on shorts or to trade it long. Pretty good resistance right here. I think I just reversed right before the start of the video those longs that I covered in reverse there this morning, but that's nice resistance right there. So maybe a little more upside, and I'll layer back in. But if we pop that 1970 level and we get some legs in this rally, we may go up there. So you might want to keep tight stops if you're an active trader. That would give us a marginal new and divergent high on the Russell 2000 here. There's that line off that high. Let me redraw that for you. So again, it's a possible scenario. We don't have to see that, but it's one that I would be looking for. And looking to short that, add to some right there. Even just the fact that it is a divergent high on a very overbought rally. And then this is really the trend line you need to see break, whether it happens today or next week. Oh, by the way, and I think I said it in that last post, that 1921-ish level right there, that's pretty big resistance also. So that's your BOD, or benefit of the doubt line right there. Let me go back a little longer. That's the line right there. It was pretty good resistance on the small caps, and so if and when that breaks, this is where we'll probably carry down to this larger trend line right there. And then ES, are your S&P 500 futures. These lines should be similar on SPY. I'm just covering the futures today. If I cover every single iteration or variation of index derivatives such as futures and all the different ETFs, it would just take forever. But there's your uptrend line and nice support. So that was a high probability bounce target right there, 4100 plus the uptrend line that's intersecting dual support levels. And max target, I think, for a day trade, if you're just day trading, target that downtrend line right there. It's not super well defined, but there's also some price resistance in there. But again, I'm going to show you the short-term charts. So an active trader, this is the world I live in often. Yesterday I was out. I don't know if I mentioned that. Thought I'd be wrapped up by my taxes because I was and a victim of Hurricane Ian. The IRS gave an extension on top of the October 15th deadline for tax returns. Those with an extension, they extended it out to February 15th, and so I thought I'd be wrapped up, and oh my goodness, ran into a bunch of issues. Overfunded a qualified retirement plan, and that's usually not a big deal as long as you take it out by the tax filing deadline. But then the broker, hours spent yesterday trying to do this. Broker couldn't do it because they only can process current year or the previous year. Well, previous year is 2022 now, so they start working on that. And then last minute, okay, fire it off at 4:30 and try to e-file it. And tax software tells me they can't e-file past anymore past December 31st. I haven't sent a paper return in for years. I like to electronically file. My returns are a mess. 2 businesses. My wife has a side business and she's an employee, and IRAs and everything, and you name it, and trading futures and stocks. Oh my gosh. So anyways, I got all printed out and barely made it to the post office at 5:30 because I had to go to the one across town. It's the only one that's open that late. And so 2-hour round trip just to get that dropped off. So I was a spent shell yesterday when I got back. Sorry I didn't get a late end of day thing out to you. But all right, so we'll pick it up today, and we're back where we were last couple days. And again, the takeaway is we've been grinding around. We go up, we go down, and active traders, this is the uptrend line. This is just a 5-minute chart I jumped to. Sorry if I kind of tangentially went off there. 1 week chart, 5-minute candles, and so there was price support. And remember, that's why I said wait for a solid 60-minute close. Expected a reaction off the bounce of these trend lines this morning, and that's it. So it was good for if you trade the Qs or NQ. Good for a 1.3% bounce and right into resistance. So this is where I reversed. That was my target. I'm just looking to actively trade right now. 12,670 and a downtrend line right there. So pullback target, minimum target right here. I'm looking for at least 12,607, but I'm going to set a stop. They could pop this trend. Looking if they pop the trend line, pretty much let's say today's highs. If they pop today's highs, they pop both the trend line and that 12,670 resistance. They're probably going to take it up higher. And that could even open the door to that marginal new high scenario. We'll see. I'm gonna, normally I might just cover there and get out, but I'm gonna just set a stop and leave it the potential if it wants to reverse and go on down through there. We already checked that trend line today, so the next run at that trend line, and again, it shows better on the 60-minute chart. The next run of that trend line should do the trick on breaking it. Where is it? Draw it here. Well, yeah, that's I'm gonna. This is NQ, and I just redrew it. Let's just use that one right now. I just drew this on a different board. The other one I had us like this. I had us the primary trend line there, and then the little channel zigzagging. So there's some work to be done on the downside. Remember, there's a mountain of support below. So it's still anybody's game here, but This is what we're likely to see for a while. This bouncing around, consolidating, upside pop. I already gave you my thoughts. Certainly possible, but it's probably it will be a fake out move. And speaking of fake outs, let me get to did I cover ES? I just showed you RTY. Let me just get to ES. Yeah, there was that ES trend line. Yes, I did. The VIX. The VIX is a big one. So yesterday, after I got the first post out to you, I had to turn my efforts back to the taxes and got buried in that. So I didn't get this out to you, but this is a lot going on with the VIX. This is that primary downtrend line, that 6-month chart, 2-hour candles. Same thing will show on the daily, that same downtrend line. And will the real fake out stand up? In other words, we've had 2 fake outs. We had a false breakout. Breakout there, it rallied right into that 2171 resistance right there. It's pretty good resistance, and went down to backtest, but then the backtest failed. We went below the trend line, but now we broke out again. So which one is the false break? Is that the whipsaw? Is that a real deal breakout right here with a backtest that had a little fake out move down below or not? Well, remember, we're coming off a divergent low, so the VIX is still set up. And I talked about this just a few days ago about the VIX being prone to whipsaws sometimes. But this is a hourly chart, a daily. I'm sorry, I was just showing you 2-hour candles. This one's delayed, that's why I'm not showing it, but it's right there. So that's it. So basically, still a breakout. Remember, this whole thing with the purple lines, bullish falling wedge pattern, breakout back test. So if this plays out. Now, what you want to watch for, since we've had this, is that going to be the whipsaw, that little move down yesterday and back above today? Quite likely, especially the fact that we're still in a larger bear market. So watch this. If this happens and the VIX starts moving up, you could see the VIX move up and get that marginal new high in the indexes, especially QQQ, but probably not. And if the VIX takes out that reaction high, if it starts moving up from here now that it's come in and back tests and even undercut, then watch for a break of that high. That should send the VIX up explosively, potentially, all the way at least to this trend line here. But remember, the VIX kind of works, it's kind of like an EKG. You get these blips, and then blip down, blip up, blip down. And those blips up are the drops in the stock market. So those are the things I'm watching for in the equity markets. It's still not an all-in moment, but it's an active trader's moment, or time for active traders. Or if that's not your thing, like I said, just stand back and wait, or scale into positions if you share the same mindset. And again, even if you have an opposite mindset of me and you think this market is going to new highs and the bear market's over and we're in the early stage bull market, all the levels that I'm showing you in these videos hold true just as well for bulls, those that want to trade long. I'm trying to populate my trend lines here. For some reason, they're not populating. There they go. You have to sometimes give it a little jump start. And that would be, for example, the S&P 500, the broad market. I've covered this 100 times, but I just want to go over it. Primary downtrend line, huge. 200-day moving average is huge. This is a mountain of support down here. Confluence of, and the primary uptrend off the lows. It doesn't get much better than that. So if you are a bull, and you're buying, you're averaging, or you're looking, maybe you missed the whole run. Maybe you didn't go long back here for whatever reason, though the case was made to be long back then here. But let's say you didn't. Now you want to go long. I didn't mean to do that. Then what you do is you wait for a pullback to this level here, any of these levels in this area, this whole down here. I'm trying to draw my arrow tool and it just keeps not wanting to click. There, you have the uptrend line, the 200-day simple, the 200-day exponential. You have the primary downtrend line, massive support. So if we do get a pullback, and I think that's coming soon still, marginal new high or not, the marginal new high again would look like this on SPY. That is where bulls want to step in and buy. We'll probably get a reaction off there, maybe not, but it's also a level where those that are bearish, that believe we're going to have another leg down this year, that's where they would then add to a swing or maybe initiate a swing or trend position. Probably more of a scale-in thing. It's a range. It's not hard. There's just multiple levels. It's not a hard number. The markets in recent years love to pop key moving averages and levels. So, the big question is this breakout the real deal or a fake out? If it is, then we're doing that. If it's the real deal, then we're doing that. Okay. And while I'm on here on the S&P 500, you can see, and this, I think I had these levels on the NQ and all that. There's a downtrend line off the highs, the uptrend line. So we're pinching in this triangle. We pop that, we're probably going to get that marginal new high at minimum, but that's still my scenario if we do. And pop to the downside, and maybe you run at these 200s now, and so forth and so on. All right, enough on the equity markets. I just want to get it all in here for you since I didn't do a video yesterday. GDX yesterday, when I was kind of not focused on things, hit T2 almost to the button if you didn't already take profits. And we're there right now again. This has given you two opportunities yesterday. T2 was this level right here for the short. Remember, it's also longer term bullish. Do we bounce? My confidence isn't super high. I think there's a decent chance we can bounce. I'm going to get to silver, gold in a second. But again, from the breakdown here or the back test, you're talking, I'm just going to split the difference in the middle. That was good for about a 12.5% pullback. The gold mining stocks and gold and silver are in a larger bull market. So to me, if you didn't yet, it's just a good time to take profits, not try to be a hero and go for the, moonshot on it. We may continue lower. I'll show you in a second here. I'll probably have to do another video exclusively if that's the real thorough way to do it, and you go through and I'll show you all the individual miners. Like Newmont, the biggest one, is at support, so there's a reason to either cover, even go long. There's Newmont with positive divergence on the 60-minute chart. Some of the others I have are not at support. They're close, but actually I could add a level right there certainly for FNV. And again, I'm getting off on a tangent here. I'd love to cover all these now. I'll do it in a different video. I just want to say the miners are at support, and I think it's a good time. And I never extended. GDX could go lower, but I only gave you two targets on the short initially, and I'm going to maintain those. But if you're holding out for more, 27.44, certainly the next one. That's good support. And then an all-in moment, if the charts confirm at the time, 26.12. I don't think we're going that low, but that'd be a very good, because that was the bottom of the top of that basing pattern there, and that was the breakout that started this whole thing. So usually in a bull trend, that's a pretty good retracement, and certainly hit the measured target from this wedge right here. And so that's kind of my thoughts there. But let me show you the metals. Silver, this is just a futures hourly chart, 60-minute candles. The downtrend line's not really great. I don't have a lot of reaction, so I'm going to give that a little question mark. But what I can tell you is you have some pretty strong positive divergences. Now, divergences are not a buy signal. I prefer to see bullish divergences when something's at support or a well-defined trendline resistance level, whether it's price resistance or a trendline resistance, to see a breakout. But with that being said, you have to heed these divergences, especially in a larger uptrend. And there's silver futures on the 60-minute time frame with divergences, and then gold right here. We've been building divergences. I just need to take this divergence line and tweak it, both of them. There you go. Yeah, like that. And this one's still there. So, but gold, you see, gold had divergence at that last level and just went through it. It didn't bounce off that support level. I thought it might, but it didn't. And again, it's like I said, you look at the daily chart. You can't make a hard case to a case to go hard long yet, but it's certainly a good time to either cover shorts, in my opinion, and or lower your stops if you're holding out for more downside in the metals and the miners. Don't let that, don't lose profits. So set your stops somewhere above the recent highs. I'd like to do it strategically above a resistance level like that, a little bit above it, to give it room if they want to try to pop the stops. And so there's your update. The one metal I do like, and I took a little of this today, is palladium. That one has also nice divergence on the 60-minute chart. I'm going to show you the ETF and the futures if I can find the ETF down here. Symbol is PA. There it is. This is our divergent low right there. See on the 60-minute chart. Yep, I'm on a 60. Positive divergence right there. Pretty strong divergence. You also had a divergent low there, and it played out for that rally right into that downtrend line. So that would be the same target again. And or possibly there's some, it's not great. I would just say the downtrend line, target that. If hit, be about maybe an 8%. It depends if and when we get there. When remember, downtrend lines or all trend lines are dynamic. That means they change. They're coming in at a different price point as time goes on. And so therefore it's, you have to just kind of guesstimate when it's going to get there when I give you the guesstimated gains. Price hard resistance levels, price support and resistance. Yeah, those are hard levels, and you can calculate exactly what that would be. If this thing really gets some traction, takes out the trend line, maybe we come all the way back up to 841, but the longer term chart of palladium's not looking so hot. But again, if you trade ETFs, they do have one for you here, and that's PALL, and this is a 60-minute chart showing you the positive aka bullish divergence right there in the same trend line, which would be a target right there for you. All right, so there's another trade idea. Don't fall in love because the metals are in a downtrend line, and palladium, when I look at it longer term, put in a major top and just also took out pretty significant support. You do have a reaction high there, or I'm sorry, reaction low that it just is testing now, but it may want to continue on down there to that next target. So I'm longer term bearish based on this chart. Just looking for a little counter trend trade in there possibly, but I'm not going to fall in love with it, and I will keep tight stops on that one because it's either going to play out or not. I haven't talked on cryptos in a while, but I always say the same thing. To be bullish on the stock market, especially big tech and the NASDAQ 100, that's your risk on index, and the small caps, is to be bullish and long the crypto. They've tracked almost perfectly. The only difference is crypto, meaning really Bitcoin, Ethereum. Those only two I trade because they have futures that trade, and I don't trust any of those Coinbase accounts. Call me old school or whatever. So I'll trade the futures. But they will go up and down, and have been with the stock market, just in a much higher percentage gains and losses during the trends. And so I can show you ETHE looks pretty constructive. I mean, we took out the primary downtrend line right here, right there, and it looks like it wants to pop that. It's been testing. There was some divergence right there, not so much, but very oversold there. But again, it is in a larger downtrend line. That's ETHE, and then you have GBTC, and this one, also put in a big divergent low right here. There's your positive divergences. Double tested that again, that divergent low, extended the divergences, broke out, pointed it out here, and there it broke out. Then it broke out of the secondary trend line, and now your third trend line there. And so, it's been moving up, but again, just if the stock market continues up, crypto is going to continue up most likely, no guarantees. And if the stock market takes another major leg down, crypto most likely will as well. This is Ethereum, the crypto itself, ETH right here. There's a divergent high right there. I think I pointed that out recently. It played out for a really healthy correction. That was a drop of about 14-15%. Pushed up recently, made a marginal new, but yet even larger, just extended the existing divergences that were already in place. So just like the stock market, I think it's setting up for an even bigger drop, and therefore that's one. To me, this is more of a a short setup right now. Don't have a hard. I'd have to really zero in on the charts, and like I said, I was kind of away from my desk almost the entire day yesterday, or at least away from watching charts, I should say more accurately. But yeah, look at this. So this is just a 10-minute chart. Yeah, this one, and again, you need the stock market. It will really help. You don't have to have the market going down, but it really helps. So this kind of dovetails or ties into the analysis I gave you, the levels to watch on the indexes right there. And then finally, other than sharing my thoughts in the last few weeks that we're likely to, at best case scenario, again, grind around with limited upside in the stock market, which so far has been the case from where we were 2-3 weeks ago. I've also pointed out some of the in my preference for going to more security selection, actively seeking out the most bullish stocks and or sectors to be long, and likewise using a long short portfolio, being short the most bearish sectors. And so although this one hasn't taken out, this was a short setup PSP, it's private equity. I'm kind of picking on that sector, highlighted that last week, and it's broken down. It's well below the wedge. Negative divergence looks to be, so if you short it, had you short it, you're probably not making a ton of money, but you're also not losing any. You're about right where it broke down recently. I had a alert on one of these guys, KKR today. KKR is one of the big ones in there, the top holdings, private equity firms that are publicly traded, and look at that breakdown today. So things are starting to fire there, and still one of my favorites on the short side. Semis I highlighted as well with this one last week, and they're just on the verge of breaking down. I mean, they broke down. Let me be correct. They broke down right here, and I highlighted. There was a breakdown candle. They've just been back testing. So it's TA 101 or trading 101. You either take a breakdown or back test. But what you really want to see, like I said, back test can continue. Maybe we get a marginal new high at best. So I like this one, but just like the stock markets, maybe a soft scale in, not a hard all-in moment. And it may require some patience here because the market tends to has had a pretty voracious bid underneath it, and the pullbacks, are getting bought up. Again, we're not going up anymore. Semis stalled out. They're below where they were on the beginning of the month there. There's February 2nd, even February 1st. We're still below where we were on the highs on the first day of the month, and today's the 16th. So again, this is that go nowhere scenario I'm talking about. Markets are digesting gains. Bulls, if they can pop it up and then really ramp it up and burn through the divergences, great. But I doubt that. Again, anything's possible. We'll assess it when it comes. So those two I still like sector-wise for shorts, that is. And then, individual stocks, I started picking on the Dow about a month ago, telling you a lot of the stocks, I kind of jokingly refer to that Seinfeld episode with Festivus, saying there'll be the bear market for the rest of us. And the Dow, the Dow hit a wall. Like Dow, I don't cover most often because it's really only 30 stocks, not represented, but it had been the strongest performer for a while there in the bear market, outperforming the NASDAQ by quite a large margin. And a lot of those non-tech stocks, Apple, the bear market so far up to the lows here have been about the big fangs, big tech. They dragged it down. They have the highest weighting. There was Apple. I'm going to just tweak Apple's trend line for you. That's the top component of the Dow. Microsoft. So we all know tech's been running, and I called that one back here. Said the big fangs were likely to lead the way and have a rally there, and that's what happened. Now you can see we're waiting on all those bearish PPO crossovers. Getting close, not there. PPO is turned down finally on Microsoft, rolled over, but it hasn't crossed. Apple getting close. Look at that PPO, not there yet. So like I said, we're close to those sell signals. Wait for, you need to see a break of that trend line there on Apple. But then looking at the other ones, Visa's ready to go, bearish rising wedge, sitting right on it right now. UNH already, as I mentioned, already broke down back here, and it's been stair-stepping lower. So this is that bear market for the rest of us. Those stocks that held up and were at or near all-time or 52-week highs have been moving lower. They're now started their own bear markets, and it takes a while for the market to get the memo. And again, they don't have the weighting that the big techs do. But there's J&J. There was our sell signal. These were all covered pre or right after, before or after the breakdown. So it's been, a big drop in J&J, 11%. JP Morgan needs to break this trend line, still diverging. I think the financials are coming up for their correction soon. Need to break the leader, of course. JP Morgan's the 800-pound gorilla in the sector, so it needs to break. Walmart needs to break that minor trend line, close. Chevron, CVX, primary trend lines in purple. Negative divergences says it's likely to go soon, and when it goes, that's gonna be a major trend reversal, major sell signal, I think. PG divergent high, and it's already fallen about 12% just in the last few weeks. Home Depot hasn't buckled yet. Merck, that one was a sell breakdown right here, the trend line in the back test. From the back test, it fell and hit that 101.65. That was target was laid out in advance. Hit it to the button, to about a 12% drop, popped, rallied back into resistance, and will probably take the next leg down to the next targets. KO I won't call it a KO yet, isn't a knockout, but it definitely has been moving lower after it broke that trend line. And then, kind of look at bigger picture. You see big divergences in saying KO is coming a lot lower, will be KO'd by the time it gets down here to my target, initial minimum swing target for this year of 52 right there, and that's about a 13% drop. And this is a blue chip. Remember, this is KO. You're not going to get the 50% up and down moves like you get in Tesla and Meta and all those other ones, because this is Coke. Nike. Divergent high, starting to move lower, hit that first target 120 bounce, still headed to at least this trend line. If it bounces there, great. It'll probably just put in another marginal new divergent high, make the wedge larger. Otherwise, a break of the trend line should take Nike down. Disney, that was a long trades idea for you. One of my favorites back here. Hit the trend line, broke it, rallied up, hit that 118.10 potential target. I gave you a max potential target when I laid it out of 127.58, but then I mentioned recently a short trade idea because that's a little much. Bearish PPO crossover, and it had a nice pullback off that level. McDonald's hasn't buckled yet. Cisco broke out. Cisco had that nice downtrend line. Again, I'm just rifling through the Dow components is what I'm doing now, and just kind of showing you that some are bullish. This is why it is a stock pickers market right now, and swing traders are just going to be frustrated. So time to do a little work, or if you don't have the time and inclination or effort to trade individual stocks and sectors and kind of rapidly rotate, then maybe just stand aside for the time being. Or you want to believe the market's going higher or lower over time, you can position. And CRM, that was a bullish setup I gave you back here off the divergent low. We hit my first target, overshot it, pulled back, and we're back testing it. That was 166.55, but I also just added this uptrend line here that could trigger a deeper correction. So I don't have a strong degree of confidence in this. That's still T2. I'm not in it, so I'm just showing you levels. If it breaks the intersecting support, probably going to pull back quite a bit more. Maybe the run's over. Otherwise, T2, I would take profits if and when it gets there if you're still long. And that's it. AXP just broke out there. Honeywell, Boeing. I'm just going through these quickly. Boeing needs to take out this trend line. CAT, I threw that out as a short idea. I'm actually short this one personally. And still hadn't hit that first target yet, but I think it will. It's a nice big bullish, bearish rising wedge and a breakdown. And T2 is right there. And over time, this one could head quite a bit lower. Amgen, boom, right at the trend line. I actually hit the trend line already and bounced, and now it's making another run at the trend line right there. And since it already hit it and bounced once, this trend line tag could break. In other words, this is like this is where you want to cover a short and or go long and trade the bounce. But when you have it gets sold into and you're already at the trend line, sooner or later trend line's going to break. So now the odds are it could bounce. It's a second test. Sometimes you check it a couple times, but the odds are increased, I think, that it could break that trend line at this point in time. And so that's it. I just kind of rifled through the holdings of the NASDAQ 100. I'm sorry, the Dow, NASDAQ 100, the Dow holdings, Travelers, the insurance companies. They're headed lower, I think. Dow Chemicals headed lower, and that's it. That's all of them. Oof. Okay, guys, lots of stuff. That's not all inclusive, but those are the things that I'm looking at today. Let me get the video out to you, and I will follow up if I see anything else that stands out, any trading opportunities, whether they're quick trades. I'm doing a little more of that when I'm in active trading mode. I tend to share the shorter term charts and setups, and then I'll also try to, for you swing trend traders and investors. Oh gosh, I'm sorry, before I forget, big thing too, the bonds. Remember, I pointed out bonds lately. Bonds, will lead the stock market. Professionals or people that have been doing this a long time, they watch the bond market for clues. When bonds go down, that means rates are going up. The stock market, since the day this bear market started, there's been that direct correlation where when bonds are falling, stocks are falling. For many years or decades, bonds would typically go up when stocks fell, and they were good for diversifying. That's been the opposite now because we're in an inflationary environment. Higher rates are everything to the stock market, and so we've seen this. And technically speaking too, it says something. MUB is a general municipal bond fund has muni bonds around the country, and this isn't good. They just broke down. That means their yields are going up. And this can say one of two things. One thing it says definitively is that rates have been going up in the muni bond market, and the cost of capital is higher to municipalities, and more so, it could also mean there's credit concerns that some municipalities may, now or in the near-term future, have some problems with their debt. It was also technically, very easy short trade, had big resistance it ran into. But I just wanted to point out that this is a red flag for the stock market, and they're starting to build some momentum. These bonds, LQD, these are investment-grade corporate bonds, and they've broken down a clear bearish rising wedge pattern, and they continue to move lower. And the negative divergence says that breakdown's likely to stick, and there's likely to be more, whether we bounce back or not. And this will be bad for the stock market, absolutely. JNK, junk bonds, moving steadily lower. IEF, 3 short-term treasury bonds broke support, moving lower. It's at support now, I'll give it that. Short-term bonds don't look so bad right now. They're at support, but they did break that trend line, and they're coming off a divergent high. So I think best case they bounce, means a little abatement in yields, which could give us that stock market rally with that marginal new high scenario. That's what that would look like. That would mean, again, the short, bonds rallying for a bit. That means yields come down, the stock market would rally, put in a divergent high right about the time bonds back test, or IEI, the 3 to 7 year Treasury ETF back test there. So those are the things I'm watching, and this is how I'll look to trade it. HYG, high yield bonds, FLN, another corporate bond. These are the ones that were recently investment grades, but were downgraded to junk status. All right, so that's it, guys. I will wrap it up here, get the video out to you, and these are the things I'm watching. This has been Randy Finney with Right Side of the Chart. Have a great day.